Welcome to the Bean Ninjas podcast, where you get an all-access pass to see what happens behind the closed doors of a fast-growing global bookkeeping and financial reporting business.
In this podcast episode, we're going to be talking about common Xero mistakes. This is a solo episode, and I'm going to be talking through three main areas. Common mistakes I see related to getting Xero set up, common mistakes that relate to the administrative side of Xero, and then common mistakes when it comes to reconciling transactions. So let's dive in, and we're first going to talk about setting Xero up. Something that I see here is that it's not uncommon for not all of the business bank accounts to be connected into Xero. And ideally, Stripe, if you've got a business Stripe, PayPal account, or credit card, all of that will be connected into Xero. And what happens if that isn't the case is you'll get partway through the financial year, or maybe you get to the end of the financial year, and you'll run a set of reports and then think, gee, these numbers just don't look right. And the reason they might not look right is because you're missing a whole bunch of transactions from a bank account that has been missed and hasn't been added to Xero. So there's a couple of things you can do to help avoid this. Number one is to do a little audit of all of your business bank accounts when you're setting Xero up. And that way you can cross-check in Xero to make sure that every business account has been added, and make sure that you are adding PayPal. And if you're selling in different PayPal currencies, make sure that you've got a separate PayPal account for each currency set up in Xero. And then the second thing that helps with this is having really clear separation between business bank accounts and personal bank accounts. And it's the business accounts that you want to have captured in Xero and have those bank feeds activated. If you're banking with banks that don't have bank feeds with Xero, or there's problems with the bank feed, and if you want to stick with Xero, then I would consider what bank you're working with. Most of the major banks don't have any problems, but it really does cause a lot of headaches down the track if your bank feed does have errors or have breaks in it. And I'm going to talk more about that in the reconciling section. So the second item in the Xero setup area is not deciding at the beginning how you're going to manage receipts. And so the problem with this is that throughout the year, when you receive a receipt or invoice, you don't really have a clear process on how you're managing that. And so it gets to the end of the financial year when you're forced to take a look at it, or your accountant is forcing you to, and then there's a mass cleanup of receipts and filing. And at that stage, you're probably hoping that you are missing any of your receipts or they have been lost during the year. Instead of handling it that way, I recommend that at the beginning, when you're getting Xero set up, decide on what your process is going to be. And I see businesses use things like Dropbox and Google Drive. From March 2020, Hubdoc, which is a receipt management app, is actually going to be included in every Xero subscription. So by the time this episode is published, then I'd say that it's going to be included free for everybody. And going forward from that day, I can't see any reason why you wouldn't be using Hubdoc unless you were using a different system and you didn't want to switch over. But if you were starting something from scratch, then it would make sense to start out by using Hubdoc as a receipt management tool that integrates really nicely with Xero. It has a fetch feature where it can also extract data directly from the source. So, for example, if your internet provider was listed as one of Hubdoc's suppliers, then you could actually set up Hubdoc so that it would fetch the invoice directly from the internet provider, and you wouldn't need to save that each month. And once in the Hubdoc, that data can then be the software will read information like the transaction dollar amount, the description, the supply name, and all of that can be captured into Xero. As your business grows, your needs might change and you might need a more powerful or more specific features from a receipt management tool. So I'm not saying that Hubdoc is the best solution in every case, but definitely if you're getting started with Xero, then it's included free with every Xero subscription. So I think it makes sense to get started with it, and it is a pretty strong tool. Number 3 with your Xero setup is not taking the time or not being aware that you can customize the standard chart of accounts that Xero comes with. And that chart of accounts is a good guide. And maybe I should actually explain what a chart of accounts is first for those of you that may not be aware. When you log into Xero, you'll see that if you're wanting to allocate transactions, for example, you've seen a bank fees line item in your Bank 7, in Xero you'll have the opportunity to allocate that to a particular account code. And so you might have an account code called bank fees. You'll have other account codes called things like marketing expenses or revenue. You might have something called property, plant and equipment. And each of those accounts together make up the chart of accounts. So the chart of accounts is the big long list of accounts. And the examples that I gave are some account names, and many business owners don't seem to be aware that they can actually customize that chart of account and either create new codes or modify or rename the existing codes. As an example, you may be running Facebook ads and you want to keep that cost and you want to track that in a separate place to how you're tracking general marketing expenses because you're wanting to do some more analysis on that. And so you may actually create a separate account called Facebook ads and then have another account called marketing expenses. And that might make sense to you, but it may not make sense to another business owner. And so what I wanted to get across here is that this chart of accounts is for your business and you can customize it so it makes sense. What's important is that the account names make sense to you so that you can then allocate transactions consistently to them when you're at the bank reconciliation stage. Now we're going to move into the 3 biggest administrative mistakes that I see people making in Xero. The first one is not owning your Xero subscription. And it's not uncommon for accountants to offer to manage your Xero subscription, and that's fine. They might even pass on a discount to you. But where I've seen problems with this is a business owner wanting to change accountants, but then being worried about losing their Xero data because it's the accountant that holds the Xero subscription. So I really see that your business data, which is captured in Xero, is your data. And I would recommend owning your own subscription so you never have to worry about having that conversation with your accountant, like just trying to own it from day one, to avoid any uncomfortable conversations or any worries down the track about how you're going to access that data. And most accountants are great to work with and there wouldn't be any problems. But the reason I'm suggesting this is more around the worry that I have seen it cause for business owners than anything actually happening or going wrong with not being able to access their data. Second point here is providing user access that is far too broad. And there's different levels of access. When you're inviting someone into Xero, you can provide access so they can send invoices. You can decide whether they can look at reports or whether they've got access to payroll. And as an example, Joan, who's sending invoices, probably doesn't really need access to your payroll data. And the way I think about user access is I believe in managing it on an as-needed basis. So in this case, if Joan was going to be processing payroll, then she would need access to the payroll section in Xero. But if all she's doing is invoicing, she probably doesn't need that higher level of access. So that's something I think about each time I'm providing access to someone. The other component of that is that things can change over time. So team members' roles will change. Maybe you're working with different bookkeepers or accountants. And I think it's important to regularly review who has access to make sure that it's still relevant. And depending on how quickly things are moving in your business, that quarterly is probably fine. If things are changing super fast and if you're working with a lot of people, then maybe you need to do it monthly. I'd also recommend having an exit checklist. So if you have a team member leave, then you would be removing access to all of the systems, including Xero. The third item related to admin is not maintaining finance standard operating procedures. I think, finance is a part of your business just like any other department, like marketing or operations. But it's interesting to see how few small businesses have finance standard operating procedures. And I'm defining the standard operating procedure is the how that something is done, but also it needs to be clarified who needs to do what by when. And we actually provide a number of finance SOP templates as part of our How to Do Bookkeeping in Xero course, and we'll link to that course in the show notes. Here's an example of a debtor's standard operating procedure. And this can be really simple. First of all, before we get into the how, I think it should be clear, who needs to do what by when? And so in this case, it might be, on Mondays, our admin team member needs to run the age receivables report in Xero so we can see who owes money. Then we need to have a clear action plan of what happens. What happens if we have a customer who's a day late? What happens if they're, for example, 7 days late or 14 days late? What happens? And so then in our template, there are standard email templates that could be sent from friendly to gradually getting more assertive to the point that a phone call might be needed. And so by mapping all of that out, it makes it very clear and there's a standardized way to follow up edits. The next component, we're getting into the last section now, which is the 3 biggest mistakes when reconciling bank transactions in Xero. The first is not reconciling the bank account in Xero to bank statements. So think about this for a moment. You've been doing your own bookkeeping. You've reconciled every transaction in Xero, so you've allocated every transaction that has come through the bank feed to one of the accounts in the chart of accounts, and it feels great because there's no more transactions to reconcile. But how do you know that every transaction came into Xero through the bank feed? How do you know that there weren't any errors? How do you know that there wasn't a break for a couple of days or there were some duplications? And while this isn't common, the bank feeds have been getting better and better with Xero. It's not common, but it's not right 100% of the time. And the best way to check this is to run what's called a reconciliation report in Xero, which shows there's a couple of different sections on that report, but it shows you what the expected bank statement balance is. Then you go and log into your online banking and compare what the ending balance at the same date is and compare it to that reconciliation report. And if it matches, then it's fine. You'll know that all of the transactions have come in correctly into Xero. But if not, then it's a matter of investigating that further to figure out, do you need to manually add a couple of transactions into Xero? The reason I'm mentioning this is because when I'm working with business owners who are doing their own bookkeeping, this step is missed a lot more often than it's completed, which means that often the business owners are looking at incomplete data when they're looking at their reports. The next thing I wanted to talk about is some confusion around accrual accounting and bank rules. So the first component of that is, what is the difference between cash and accrual accounting? And then the second component to that is, if you are using accrual accounting, can you still use bank rules in Xero? Well, I'm going to start by defining the difference between cash and accrual accounting. So let's use an example. If you're working with a designer and they sent you an invoice in February for $2,000 and you paid it in March, if you were doing accrual accounting, you would create a bill in Xero, you would attach the receipt, or you'd use Hubdoc to do this for you. And this would show in your profit and loss in February based on the invoice date of February. Then when you pay it in March, it would be matched in Xero, and it would show in your payables area or creditors area that you no longer owe that money. Under cash accounting, it would show in your profit and loss in March when you paid for it, but it wouldn't be showing in February. So cash accounting is all about the cash timing. When did the money leave your account? Whereas accrual accounting is more related to when the goods or services were provided and we're using the invoice date. So if you're using accrual accounting in Xero, then when you're paying for things, you're generally using the bills function of Xero. So how do bank rules play into this? Let me start by explaining that a bank rule is setting up a set of criteria to help automate and speed up the way that you reconcile bank transactions. As an example, if we use bank fees again, your description coming through into your bank account, the transaction might say bank fees. And so you could set up a rule that says for Commonwealth Bank account, for all Commonwealth Bank accounts in Xero or for all accounts, if the description says bank fees, then allocate the transaction to the bank fees account. And that allows you to click OK when the bank rule is activated rather than having to manually enter that information. So the reason to use bank rules is to speed up processing. But if you're doing accrual accounting, then how do you know when to use bank rules? And it would only be for those repeating transactions with things like bank fees. You wouldn't be using a bank rule for things like the designer, because the bank rule allocates the transaction on the date that you pay it. Whereas under accrual accounting, we're needing to use that bills function in Xero so we can capture the invoice date to get the timing of the transaction in the correct month. So I'll recap on that. There are differences between cash accounting and accrual accounting. And big business generally always does accrual accounting. But if you're getting started, then cash accounting, it can be a good way to get going until your business grows enough that the cost benefit of doing accrual accounting is there. So if you aren't doing accrual accounting, there are still situations where you can use bank rules, but generally you would be using the bills area of Xero rather than bank rules. The third common mistake I see when it comes to reconciling transactions is business owners not knowing how to handle transactions where they're paying themselves or they're paid for business expenses, but they did it on their personal card. The component around paying yourself, depending on your business structure and also the way that you're paying yourself, so whether it's wages through payroll, whether it's directors' fees, or whether you're paying something like distributions or dividends, depending on which of those categories it is, it will go to a different account in Xero or be treated a slightly different way. And we go into more detail about how to do that in our How to Do Bookkeeping in Xero course. The second component of that is, well, what do you do if you just had the wrong card with you, but you actually did buy something for the business and you had to put it on your personal card? Well, there's ways of capturing that in Xero as well. And the mistake I see is that it's just left, and so then you miss out on claiming those tax deductions, but also your accounts don't truly reflect what's happened with the business because it's missing some transactions. And so you can add those costs into Xero manually. So to recap on that, we've covered 3 common mistakes relating to setting Xero up, administrative mistakes, and then 3 common mistakes related to reconciling bank transactions. We actually cover a number of these topics in our How to Do Bookkeeping in Xero course. And if you do the mentorship version of that course, we have 5 weekly mentoring calls, so a call for each of the 5 modules. And during those calls, you have an opportunity to ask questions and also get feedback about specific areas of your business. We talked about the importance of having a chart of accounts that makes sense for your business. And so as part of that course, if you're doing the mentorship option, then we actually provide direct feedback, individual feedback on your chart of accounts as it relates to your business and your industry. So I hope that's been helpful. And I love helping when it comes to accounting and bookkeeping and Xero. So if you do have any questions, feel free to drop them in the comments below or contact us, Ninjas, on social media.